Welcome back to Simply Money. Tonight we are going live. We're going to be sharing SPYI versus SPY, comparing those two funds. We're going to look at taking no distribution versus taking distributions. So we're going to be getting into that here in a minute. I'm on about 5 minutes before the start of this. I figured as folks came on, I could chat with them a little bit before we get started, give folks that want to watch the entire presentation, discussion, time to get on and not miss the beginning. So I'm just going to be talking here for a minute as we get ready to share SPY and SPYI. I have a chart I'll be showing. We'll be dialoguing. Feel free to throw questions or comments in the chat. If you come on, it helps out. Just tell us, maybe where you're from, what country or state. I don't need to know your address or anything. We don't want all your personal information, but just to get to know each other as folks are coming on and sharing about what's going on and watching this. It just kind of makes the community feel a little more connected as we see people from all over the world connecting. I think that's always fun. Does anyone have any questions? I see a couple people jumped on here. Go ahead. Just say hello if you would. Just let us know you're here. Make sure you can hear me okay. If you can hear me, go ahead and give me a thumbs up or something in the chat. As we're getting ready again to get started, we will start here in a couple more minutes. I'm excited about the new subscribers we've had, the new members we've received. I appreciate your support. I got a lot of good feedback on the Ulti strategies that I shared on distributions, whether you take all of it or some of it or none of it. Had one I just put out on Misty. Working actually as I was getting ready to do this, I was working on doing a BTCI one where I'll be comparing that and the different distributions and how it impacts the outcome. So I'll be hopefully putting that out on Tuesday next week. But I wanted to go ahead and do this SPYI here before too long. I know several people have asked about this one. I had done one a while back on QQQ and QQQI, and people started saying, hey, can you compare these? And I have a whole list of them I'm going to be comparing, but I wanted to try doing this one live. So bear with me as I try doing some of this live stuff and sharing the screen as well, making sure you can see that. So your feedback helps me. I want to make improvements. So as you engage in these, it's most beneficial for you. Hey, Val from Florida. Hope your weather down there is nice. Summertime, Florida, not so much for me, but January, February, I'm all for Florida. That sounds great. I don't like the humidity, but I'll take it in January and February. All right. So let me go ahead and get started here. Again, I am new at the live streaming, so give me a second. And if you can see that, let me know. Give me a thumbs up if you can see that. I know I moved it off a little bit just so you can see it. I'm going to minimize it. Chat as well. Can you guys see this? Yes, no, maybe. Okay. Is it moving around on your screen as I move this? All right. So I got to get this over. There we go. All right. I'm almost there. Give me a second. All right. Here we go. So as you can see over here in this first column, it's just the date. I dated this to the inception of SPYI. SPY has been out for quite a long time. Obviously, we don't have that amount of time with SPYI. So SPYI, we went back to August 31st of 2022. I'm going to have the price here, and then you have the number of shares held. This first section here, what we're doing is we're doing just reinvesting. We're comparing because people say, oh, you should buy the underlying. It's going to perform better. So we're going to do complete drip where we get SPY and we just buy more of that share or fund that we're holding. So with SPY, you can see the price started at $395, and for SPYI, we're at 48.87. So let's go down SPY real quick. You can see we have 126 shares held, and we're going off a $50,000 scenario here. So you have 126 shares held. You don't get a dividend until the second month because it's a quarterly payer. Where here in SPYI, you're going to get monthly distributions because it's a monthly. So that first distribution was $1.60. And then you're going to go ahead and you get SPYI paid you $200 for that. You're reinvesting at this share price. So you get a half a share. You add that to your total, and this is your running total right here. So we'll just go down real quick to the bottom. You can see as SPY over the 2 years that we've 3 years, sorry, that we've done this, we've gained quite a bit from 395 up to 632. Shares held now are 132. We haven't gained a ton because it's a high share price. It's not a big dividend payment. You're getting a little bit here and there, and you're adding fractional shares every quarter. So your ending dividends that were reinvested was 2,655. But your balance, because of the share price doing so well, is at $83,000. So you've gained $33,000, and that is in 3 years. So it's a pretty nice return there. So now we want to go back up here and kind of scan at SPYI and see if we look at the share price at $48, that gives us 1,023 shares. The dividend is only 49 cents, but that paid us almost $500. We're able to buy 10 more shares. So as you go down all the way to the bottom, the end of this 3 years, you're now holding 1,456 shares, and you've received almost $22,000 in dividends. But again, on this scenario, we're just reinvesting those. So those have been reinvested and bought more shares. As you can see here, we've bought 14, 15 shares each time. And so we're up from that 1,023 to this 1,456 on shares. Our portfolio balance is up to $74,894. So that went up $24,398. So not only did you get the dividends and they reinvested, you are not seeing as big of a return, and that's where the return comes from, is the reinvestment. So I would agree. This is just me, my opinion. This isn't financial advice. I'm not telling you to buy SPY, SPYI. I have to say that. It's just how YouTube is. And I'm not telling you which one to buy. But if it was me, I would be much more growth oriented if I was young, if I was looking long term. If you're 30 and want to retire at 40, maybe you want to get a little bit more of a mix. But if you're 25, 30 years old and you're thinking, I'm going to be holding this and buying and holding till I'm 60, 65, I would focus more on the growth underlying funds, SPY, QQQ, until you get closer to that retirement age. Because people say, yeah, but you're building your yield on cost by buying now and reinvesting. You're going to have more shares. But if you make, like, just in these 3 years, you've made $9,000 more, and that's a very short period of time. But if you stretch that out over 30 years, you could be looking at several $100,000. And when you're getting ready to use that and you want to be a dividend receiving person, that you're living off dividends, you can go ahead and sell, your SPY in this case, and buy SPYI, and you're going to be in the same spot as far as your dividends. Your yield on cost is not going to be, but it doesn't matter. You're taking the same amount of money and it's growing a lot faster. But what I do want to show you is in some places on QQQ and QQQI, it worked out where buying the QQQI in the short term worked out better when you're taking the dividends. So this is what we're going to look at here. Excuse me while I lower this real quick. Okay, we're going to be looking at the SPY and the SPYI. If you're taking the dividend, I want to make sure I get on the right columns here. Sorry about that. So with this, you got to remember that if I'm taking SPYI and I'm taking the dividends, I have to make apples to apples comparison. So with SPY, I have to sell the same amount of shares to get that same dollar value. So in this case, SPY, we have 126 shares. Our balance is $50,000. SPYI is paying us that almost $500. So I have to withdraw $500 worth out of here, out of SPY, because I need that money. If I'm retired or living off of this, I need to withdraw that. So I have to sell some shares. And so I'm selling just over, was it 1.4 shares to get this same $500. Where here I didn't sell any shares. As we go down, you can see with the drip on, or sorry, with no drip on here, you're actually in a better place with SPY when the market is down, because when the market's down, like right here, you're having to sell more shares to get that same amount of money. And that's where a lot of people like dividends, because they don't like selling if the market's down. So real quick, I'm going to move this out of the way. What do you guys think so far? Is there any questions, thoughts on this? Like you're sitting there looking, saying you're going too fast. I can't follow your chart. I can't see your chart. Maybe it's too small on your screen. Maybe the screen's not moving like I think it is. You tell me in the chat real quick so I know what I can do to help make this clearer. And then we're going to kind of go to the bottom of this SPY, SPYI. I'm not going to make tonight a long live video. I just wanted to share this briefly and give you an opportunity, those who wanted to and were able to jump on, to interact a little bit and ask any questions. Okay, nothing there. I will keep moving. Okay, so over here, I want you to notice this. This to me is where a lot of people feel a lot of emotion with this, to say the least. I read a lot of comments and people get pretty intense about how they feel, and that's fine. Everybody has their own opinion. I always say personal finances are personal. You have to do what's best for you. That's why I'm not telling you which way to go. I'm just sharing on all these charts and videos the data as I see it and as I look back and back test stuff, because we don't know what tomorrow's going to happen and hold. 2 years, 5 years from now, we don't know. So nobody knows what's going to be the best way to go forward, but we do know by looking back what it's done thus far. And if you look at SPY, by following this method of I have to take out the same amount as whatever SPYI's dividend is to have the same amount to live on, you can see just in that 3 years, I've sold down 36 and a half shares. And that, to me, you start thinking, well, what if that's 3 years? What if we go 10 years? What if we go 15 years? What if we go 20 years? Well, it could actually be better, because maybe this share price goes skyrocket on SPY. So you're only selling a tenth of a share or a hundredth of a share if it just takes off. Who knows? So maybe you're not dwindling down your shares as much. Your share value, I mean, you're still up at 56,000. So if you look at SPY versus SPYI, you actually still have more money in SPY than you do in SPYI by, a couple $1,000s there. But this is what concerns people is I still have over here all of my shares. I have every one of my shares, and I could sell some if I wanted to get more money, but I'm still receiving, look at $500 here. It's been pretty much $500 every month for 3 years that you've received. Over here, you're taking out that same amount, but now you're down to 90 shares. And let's just say hypothetically it did that for 3 more years, maybe you're down to, 55 shares. In 3 more years, that can get scary. You start thinking, wow, I'm running out of money. We're here, I'm still collecting that $500 a month and my share value's gone up slightly. So if, 10 years, this is up to 60,000, these are going to start going up slightly too. So I'm getting slight bumps in my dividends. So that's why I like doing these, just kind of comparing apples and apples. And sharing how the underlying can be a great thing. And I own underlying. I own growth funds. I own SCHG. That is a fund I own in my growth portion of my portfolio. As I get closer to deciding when am I going to retire, when are my wife and I going to need this money to live on, I focus more and more on the dividends. And that's why I've been doing a lot of these videos, because I've been shifting a little bit and focusing more and more on dividends. Those who watch my channel for any time now, I have a pretty decent holding of SCHD. I bought some QQQI and SPYI for my income portion, because for me, my goal, again, this is my personal goal. You're going to make your goals and your risk tolerance will determine what you do. But for my goals, I want to live off dividends. I don't want to sell shares if I don't have to. That's kind of my goal. And it's kind of twofold. One, because I think if something happens to me, it makes things much more stable for my wife. And if nothing happens to either of us and we both have a long life and longevity, then we haven't dipped into our holdings, or not much anyways, and that is a legacy we can leave to our kids. And that's just something that I would like to do if possible. I'm still young. I'm only 56, so I don't have to work much longer, or I may work longer, just depends. And I want to be at that place where I can do it and feel comfortable. I want to retire in a place where I can do the things I want to do without worrying. I mean, I could retire today, but I might be like, well, should we do this? I don't want to be penny pinching quite as much. And so that's just kind of where we're at and why we're focusing on this. And for us, again, the dividend is just a nice, easy, it's a paycheck every quarter, every month, for things like Ulti every week. So I'm going to stop sharing my screen here. You can look at me. Boo, here I am. Does anyone have any questions? Is there a fund that you'd like to see a comparison on? Like I said, I did QQQ and QQQI. You can check that out on the channel. So we're looking at SPY and SPYI here. I've had people want to see BTCI and BTC. Do we have any crypto lovers or haters out there? Anybody like, I love it or I hate it? Or you just kind of middle of the ground of, it's all right, I can take it or leave it. I will be doing a video, like I said, on BTCI here shortly. Hopefully it'll be out in a few days, where you can see the impact of taking all the distribution, or reinvesting some of it, or reinvesting all of it. So does anyone have a fund they'd like to see? You guys are chatty. Kathy's out here. Any comments? Any thoughts you'd like to see on the next fund? If not, I'm going to call it a night. I'm going to make, like I said, I was going to make this quick. Just wanted to kind of introduce the live feed and see how people liked it. I did have a poll out where a lot of people said they'd like to see live feeds. So I thought I'll go ahead and try that and see if they like it. And I will, if you like this live streaming, or you'd rather me just record it and make it a little bit smoother, I can do that. Before we go, in the chat real quick, just say live or recorded, or some form of that, so I know just those watching. Do you prefer the live or me to pre-record? And that's kind of where I've been trying to get a feel of what resonates best with those who are watching, those who are engaged. One thing I like about live is you're having that interaction right now. With the pre-recorded, I do try to comment and reply to all comments as quickly as I can. Sometimes it can be tough to get to all of them. So you'd like to see a multi-risk live. Yeah, I can definitely do that. That'd be one to talk about and share. Alti's a hot topic right now. If you go to my Alti video that I just put out last week, I think it was, got a lot of comments. A lot of people it's like they love it. There are some people, I don't mean it mean, they were just like being haters. And that's fine. If you're opposed to something, I could care less. I mean, it's your money. You put your money where you feel comfortable. Just funny when I read some of the comments, people like, I think they feel like I'm promoting this, like, oh, you need to do this. I'm not a Ulti fanboy. I did put a small portion in as for the channel as part of doing this. I wanted to pick one of the funds where I said I'm going to go ahead and do an experimental fund, and that's the one I picked. The QQQI and SPYI, that was not an experiment. That is part of shifting into more of the income focus for that retirement. So in the chat, anybody sure, like, are you more a dividend distribution yield person, or are you more of a growth focused? Again, everybody has their own goals, their own risk tolerance. I would consider myself a fairly moderate risk. I'm definitely not risk averse. I know people who, and they'll put I had one guy talking about, I'm going to take all the equity on my home and I'm going to put it all in Alti. More power to you. I don't recommend that. One, I think you need some diversification. Two, I don't recommend leveraging your house. It's just me. But I also know people who are so scared of anything, even something very, if we can call safe, anything in the stock market, using the word safe could be kind of dangerous, but even something like SPY or, SCHD, something that's very mild volatility, they're so scared of that. And they, spend 30 years saving, great savers. They put lots of money in the bank, maybe in some CDs, but they're not keeping up with inflation or barely beating inflation. And that just over long term really hurts you. So many people are so scared of the volatility. And that's why I talk a lot on the channel, especially for new or beginning investors or people who are really unfamiliar with investing at all. I think it's better to pick a really broad index fund and just kind of let that do its thing. You're much safer that way. I'm not a big pick one company person. I mean, there's some companies out there that, I'd say, oh, that's a good opportunity, but it's just not me. And so you have to pick what works for you. But I think avoiding the stock market at all can be really detrimental to your financial future and wealth building opportunity, because if you're throwing money in CDs and stuff, you're not keeping up with inflation or barely beating it, where you're in SPY or VU or something like that. Over 30 years, you're averaging 10-12%. And the volatility, people hate the volatility. If you've seen any of my videos, I'll be doing another one at the end of the month, because I'll be updating my total dividend payouts from all of my income portfolio. SCHD has been my longest holding one. So I go through that and I show you SCHD, its ups and downs. And even in like the 2020, when the market really crashed and panicked because of COVID, we were still up on our portfolio balance. So it really, I think, helps visualize for people, like, even now where we're down 40%, we're still up on our total value. And then you give it, for COVID instance, you give it 6 months and it was back and then above where it had started dropping from. So having these visuals for a lot of people is helpful, especially those who are skittish about what could or couldn't happen. Obviously, what happens to a lot of people is they say they put 10 grand in. let's just pretend this year you put 10 grand in March. You're like, okay, I'm going to finally pull the plug. I'm going to jump in, and you throw money into to the market in March, and then the tariff news comes out, and you watch your portfolio go down to 5 grand in like 2 days, and you're like, see, I told you stocks are dangerous. It's stupid. I'm putting all my money back in the mattress. But then, look at what's happened since then. It's back up and above where it was when it fell. And that is the course of the market over years, 10, 20, 30, 50, 100 years. That has been the course of the market. It drops, it goes back up. Anybody that's ever looked at a stock market graph, that's what you see. It's the roller coaster. One of the favorite quotes I have with Dave Ramsey is he always talks about, the only person that gets hurt on the roller coaster is the person that jumps off. And that's what people typically do. Those who are skittish, those who aren't committed to the long term, they see the market go down and they start panicking, so they sell out, and that's where you lock in your losses. And these funds that we're looking at are a little more volatile. Like SCHD, I think has a beta of 80.85, if I'm not mistaken. And for those that don't know, beta is how much it moves up and down in comparison to the market. The S&P 500 is the standard. It's a beta of 1. And then, so if it's less than 1, it means it doesn't move as high or as low as the S&P 500. Where funds like this, SPYI, or I think it's 1.15, so it's a little bit higher. You get into things like Alti, BTCI, those are like 1.85, meaning they're going to go a lot higher than the S&P, but they're also going to go a lot lower when things, in bear markets, recessions, corrections, whatever you want to call, when the market goes down, and they go down. That's just part of it. So again, if you're skittish, you're like, I'm not sure if I want to get into something, find a fund that has a low beta, something that's not going to be as volatile. Still going to grow. It's not going to grow as fast. It's not going to grow as much as like SPY, but it's going to grow better than a CD. So those are things to look into. I hope those things are helpful for especially new beginning investors. And that's what I do this channel for. So I know some of the videos you're going to watch and you're going to be like, I don't want to watch this. It's on budgeting, or it's on, what is an index fund. I try to cover all things financial. So some things are a little bit more aggressive, a little bit more advanced, a little bit more fine tuned to individuals. And other things are not. And so I understand that. So your input always helps me. The more input I get from people in the community, the more I'll lean toward those types of videos. That's why, Alti did really well. So I did one on Misty. It did pretty good. I'm trying to do what you guys want, and I appreciate any feedback. So, Michael, I appreciate your input here. Let me go back here. Val, yes, dividend focus. I appreciate that input. I love dividends. I'll be honest. It's nice. You wake up and you get a notification. You were paid X number of dollars on a dividend. Stay tuned. End of the month, you'll see my dividend income portfolio update, and it'll be the best one yet because I've shifted to the QQQI and SPYI. So I hope you'll join me for that one. I'll have that one end of the month when all the dividends come in. Michael, all I care about is the company goes up. And yes, and yes. Whether it's an ETF company, we all want that. And we all want that, psychologically, we all want that going up. We struggle with the up, but it's a bumpy ride. But as long as point B is higher than point A, we're happy. And of course, the higher up B is, even better. So we definitely want an uptrend market. And that's why we have to be careful. Even with this one I just showed you, SPYI, we're looking at 3 years. 3 years in the stock market is not a long time. If you look back at the history of the stock market, we have time frames where the market overall is down 3 years in a row. Think the .com bubble. Think of the housing crash in 08, 09. You know, 3 years, it's nothing. The market's up more than it's down. People don't realize that, I don't think. But we have to be careful when we even do these back testing, because we're back testing on this a very short period. I like doing some of the others like SCHD. I think I'm looking at 8 years now, somewhere in there. So it's a little bit more solid of a back test that we're doing. And I've done others where we look back testing the S&P 500 for 30 years, 50 years. Those give me a little bit more comfort in seeing how great it really is. Michael, also, what do you think on KR or CHWY that both report earning in the last 12 hours? I actually have not looked at those. I've kind of been up here recording and doing some editing, and then I hopped on live, so I have not seen any of those reports. I did see Alti paid 9 cents. I looked at that real quick. So it paid 9 cents on a dividend. A lot of people were concerned because last week it was steady decline. There's I see it declined more than the dividend or the distribution. And then the last day or two, it's gone up a little bit, and plus it paid the 9 cent distribution. And I'm not saying it's going to go back up. I'm not saying it's going to go down. When you're looking at funds like Alti, and then you're saying, oh, see, the distribution was paid and you've actually lost more in value than the distribution. I get that. And that happens. But think about this. If you hold SPY and it doesn't really pay a dividend, we can basically say it's no dividend because it's so small. It goes down. You could have 2 weeks. It's just down, down, down. And from 14 days ago, you're down 10%, 15%. It didn't even pay a dividend. Stocks and funds do that. So just looking at because something's down temporarily or short term isn't the solution of, oh, it's going to be down, it's down, it'll stay down. It's also not to say it's not going to keep going down. I don't know. Again, for those who don't know, ULTY is an experiment for me. It is a small portion. Using it to be able to show you guys in my actual portfolio what it's doing. Now, the one I did on the back testing, that was just a hypothetical 50,000 investment, what it did. But moving forward, when I'm doing updates, those are going to be from the holdings that I have. Anyone else have any questions? I've seen a couple of people pop in and out. SPY, SPYI. I think they're both great funds. My personal opinion. You have to determine what is your goal, what is your risk tolerance. Those are things you can't just listen to somebody else. It's your money. I'll give you an example. I have a couple buddies. We'll go golfing, and after golfing, they want to go to the casino. And I don't go with them. I'm not opposed to casinos. I've been in casinos. I've been to Vegas. I love going to casinos for the lights and the food and drinks, but I'm not a casino guy because I don't like betting. It's just not fun to me. If you enjoy it, go for it. But for me, why do I want to, which is going to be lose money for something I don't enjoy? Now, when we're golfing, we might put a $5 bet on something. I'm not a big high roll and, hey, let's put, $1,000 on this game or any of that. My golf game isn't sure enough. $5 is stretching the ability that I might actually win. And that's more just for fun, kicks and, just for the fun of it and, ragging each other. But with the stock market, there's people that just can't handle that. And, but there's others, they're like gambling. They're throwing all their money into this one big bet. And, again, that's your decision. I just highly caution against that. I strongly encourage to diversify, even if you're in these high yielders. Even if you're like, I'm a high yielder, there's some guys I've been watching. I really like what they're doing. Their channels are great. But they're all high yielders. Like I think like QQQI and SPYI would be too low for them, or that'd be like their lowest. And then they have, their Alti, the Misty, the Maggie, all of those like 50, 70, 80% yielders, and you have the whole discussion on NAV erosion. Even with those, I would recommend don't go all in on one. That's just me. I wouldn't put all my money into any company. I wouldn't put all my money into any one fund, maybe except a total market fund if I was just starting out and didn't know what I was doing, didn't have a goal and know how to diversify a little bit different in different funds. Maybe a total market fund would be great, because then you're getting exposure to everything and you don't have to worry about you're obviously diversified. So again, that's me. I appreciate you joining me tonight. I'm going to go ahead and wrap this up. I know I said that a bit ago. We've got a couple comments and questions. I wanted to make sure we talked about those. I really appreciate you guys joining me. I look forward to doing this again. Hop on the channel, a video that resonates with you. Throw comments about things you'd like to see. Again, your comments, your suggestions drive what I will put out there and produce. Whether I, like Alti, I'm holding it. I'm not holding Misty, but I produced one showing backtest. I don't mind doing that. I will do the research. I will do the back testing. I will come up with other videos of topics that you want to know about and give you the information for you to do what you want to do with it. I'm not here again to tell you what to do or what not to do. I'm doing my best to provide as much information as I can for you to make educational choices and informed decisions. And I hope you're looking at other things beyond me. By all means, reading articles, reading books, watching other YouTubers, doing your own research, getting on like Yahoo Finance and looking at some of the information on there. That's a really great way to just keep abreast of what's happening and understanding and developing and growing your understanding of investing and growing wealth. One last thing. I did an interview just recently with a guy, Rakim Shabi, I believe. I'm sorry, I forgot his last name right off. Old age hit me. Rakim. Anyways, his book is Overcoming Financial Trauma. It's a great read. It's actually going to come out in November, I think 11th, somewhere in there. I did an interview with him on the book. The information in the book is amazing. I look forward to that. If you've never heard of Rakim, Rahkim, look him up. Check out his book on financial trauma. It is amazing. If you've ever read Psychology of Money, this is very similar to that, but actually takes it to a much deeper level in some of the brain activity, some of the things that are happening. And I'm butchering it. I don't want to butcher his very well presented information, but I'll be having that video coming out hopefully here in a couple weeks. I'm hoping to premiere it where it'll be live when it goes out, where I'll put the video on. If you've never done a premiere, what it is the video's playing, but I'm hoping Rakim and I can both be on to chat while the recording's playing, so there can be live interaction to the recording. So if you'd like to see a premiere of that, let me know. I'll be doing a poll once I have the video finished in the editing. I'll have the poll to see who wants a premiere, and if we get enough feedback on that, I will definitely be doing a premiere, and hopefully I can get Rakim back on. He said he'd do his best to get back on. So with that, I appreciate you. And as always, I'll see you next time on Simply Money.